All right, welcome back, everybody, for another deep dive. Today, we're going to look at the January CPI report and this idea of Trump-Re-Flation. It's a pretty interesting concept, so we'll unpack some of the key findings from the report and what it could all mean, for everyday folks like us.
Yeah, and we'll dive into some alternative perspectives on inflation too, some stuff you may not hear on the mainstream news.
Right, exactly. And we'll even take a look at a real-world example that shows just how much inflation is hitting, regular people. But first, let's just jump right into those CPI numbers for January. The report shows a 0.5% increase month over month and a 3% increase year over year for the CPI. And for core CPI, well, that's a 0.4% month over month and 3.3% year over year. Both of those numbers actually beat what most analysts were expecting. I mean, remember all that talk about how inflation was finished? It seems like these numbers are telling us something different, right?
Yeah, absolutely. I mean, we are seeing some signs of, easing in certain areas, but the overall trend is definitely pointing towards inflation sticking around.
Okay, so where are we seeing that easing?
Well, for instance, owner's equivalent rent. It's a big part of CPI, and it often kind of reflects those longer-term inflation trends that's showing signs of slowing down. But on the other hand, if we look at the super core indicator, it tracks inflation in services, but it doesn't include housing or energy. Well, that's staying really high. So to me, that says we're not really out of the woods yet when it comes to inflation.
Interesting. And of course, we've got to see how the markets are reacting to all of this. And it looks like it's a bit of a mixed bag, isn't it? The NASDAQ seems to be doing fine, even performing well. But those cyclical sectors, the ones that are sensitive to economic ups and downs, and also those rate-sensitive sectors, well, they're lagging behind. What do you think about all of that?
Hmm. Well, I think the market is trying to understand what this CPI data means for, the Fed's next move. The Fed has been raising interest rates to try and control inflation, right? So this report has kind of pushed back expectations for when they might cut rates. Now, it looks like the first cut will probably be in September, and the market is only predicting 2 cuts for the whole year. Oh, and this has also led to the dollar getting stronger.
Right, which probably affects gold prices.
Yeah, exactly.
Which brings us to this idea of Trump-Re-Flation. That's really what we're diving into today. So what exactly does that mean?
Well, Trump-Re-Flation is basically the argument that President Trump's policies, especially his tariffs and tougher immigration policies, are actually going to make inflation worse. Basically, the logic is that those policies are likely to increase the cost of, well, everything, goods and services, and that'll put pressure on prices to keep going up.
Interesting. And the report we're looking at today argues that our usual ways of measuring inflation, like CPI, they might not be telling us the whole story. Can you expand on that a bit?
Sure, yeah. The report suggests that we should actually look at how gold performs against government bonds to get a more accurate picture of inflation. Specifically, they point to the rising gold to U.S. Treasury ratio. Gold has always been seen as a way to hedge against inflation, right? So when its value goes up compared to government bonds, which are supposed to be less risky, it could mean that investors are worried about inflation eating away at the value of their investments.
Got it. Now, there's also a lot of talk about the downsides of President Trump's trade policies, especially those tariffs. What are some of the main concerns people have?
Well, one big worry is that these policies could cause other countries to manipulate their currencies, and that it could even lead to economic chaos. Some people are even comparing it to the Great Depression, which is a bit scary.
Yeah, I see what you mean.
The argument is that tariffs can actually backfire. If another country's currency gets weaker because of tariffs, their goods become cheaper for us. And that could completely cancel out the effect of the tariffs, which would hurt everyone in the end.
So it's like shooting ourselves in the foot, basically.
Yeah, pretty much. The report even uses the Canadian dollar as an example. They say that if trade tensions keep rising, the Canadian dollar could really drop in value. And that would make Canadian goods even more appealing to U.S. consumers, which would defeat the purpose of the tariffs in the first place.
And speaking of things getting more expensive, the report mentions this crazy example about the price of eggs here in the U.S. They've jumped up by a wild 53% year over year. 53%. I mean, what's going on with eggs?
Well, that example really shows how things outside of any government's control can have a huge impact on, shortages and rising prices. Think about climate change, disease outbreaks that affect livestock, and problems with those big supply chains. All of that is contributing to the rising cost of everyday things, and unfortunately, eggs are a perfect example of that.
Right, that makes sense. So before we go on, could you sum up the main takeaways from this report for our listeners? What do you think is the most important stuff for them to understand?
Okay, so the big points are, First, inflation is being way more stubborn than a lot of people thought, and energy and food prices are a big reason for that. Second, this Trump-Re-Flation idea is a real possibility, and it could hurt the U.S. economy as a whole. And third, we need to be aware that those traditional ways of measuring inflation might not be giving us the complete picture. We might need to look at other indicators, like gold, to get a better idea of what's really going on. Oh, and lastly, with the way the economy is right now, we might need to change how we think about investing. It might be better to focus on companies that are in a strong financial position and maybe move away from those long-term bonds.
That's a great summary, thanks. Now, you mentioned stagflation earlier, and I think some people might not be familiar with that term. Can you break down what it means and why it's something our listeners should care about?
Yeah, stagflation is basically when you have slow economic growth but also high inflation at the same time. It's a really tough situation for investors and everyday people because prices keep going up while wages don't really keep up. And businesses have a hard time growing. The report actually warns that the U.S. economy might be just 6 to 9 months away from what they call an inflationary bust, which is basically just another name for stagflation.
Wow, that's something to think about for sure.
It really is. And the implications of this whole Trump-Re-Flation idea and the possibility of stagflation, they go way beyond the U.S.
I see. And that leads us to a really interesting question. How could this Trump-reflation thing play out in other countries that do a lot of trade with the U.S.?
That's a really tough question with a lot of different factors to consider. Some people argue that all these tariffs and protectionist policies could lead to a global trade war, which would hurt everyone in the end.
Well, this has been a lot of information to digest, but I think we've laid a good foundation for understanding these big ideas.
Absolutely. We've talked about inflation, the potential impact of Trump-Re-Flation, and how important it is to consider other ways of measuring inflation, like looking at gold. So, welcome back to our deep dive into Trump-Re-Flation. Before we're talking about stagflation, and I think it's, really important to understand just how difficult that type of economic environment can be.
Yeah, you're right. Stagflation really does kind of throw a wrench in things.
Yeah.
It's not your typical recession. It's slow growth, but with high inflation. And that means that, prices are going up, but wages aren't keeping up. And that makes things incredibly difficult for, well, for everyone, businesses and regular people like you and me.
Exactly. And one of the most, I guess you could say, concerning points that this report brings up is that, well, the people advising the 47th president, maybe, don't have a strong understanding of how the global economy really works.
Interesting.
This idea that the U.S. economy can just do great all on its own while the rest of the world struggles under all these tariffs, well, it's a recipe for, disaster.
Yeah, that kind of reminds me of that mercantilist free trade idea that's mentioned in the report. It's kind of a contradiction, isn't it? Mercantilist free trade?
It does sound a little strange, right? But the idea is that true global stability depends on finding that right balance between free trade and, some degree of protectionism. It's about finding that sweet spot where countries can trade in a way that benefits everyone without, leading to exploitation or unfair advantages.
Okay, that makes sense. Now, the report also makes this bold statement saying that tariffs are actually more of a symptom of an economic decline rather than, a cause. Can you explain that a little?
Sure. So think of it like this. The economic decline, well, it was already happening before the 47th president took office, right? And the traders, they're reacting more to the anticipation of these tariffs rather than the tariffs themselves. So tariffs kind of become this focal point, this symbol of, those underlying economic anxieties, but they're not really the root cause of the downturn.
So if it's not tariffs, then what is the root cause?
Well, the report says there are three main things driving inflation: shortages, demand, and a lack of confidence. And that's where the real danger of these protectionist policies comes in, you see. Tariffs and trade wars can make shortages worse by messing up supply chains, and they can erode that global confidence, which creates a kind of ripple effect that ends up hurting everyone.
So it's like this self-fulfilling prophecy,
No.
right? The fear of economic turmoil because of tariffs can actually contribute to that turmoil.
Exactly. And the report even compares it to the Smoot-Hawley Act back in the 1930s. A lot of people say it contributed to the Great Depression, but actually protectionist sentiment was already pretty common before that act was even passed. So the act itself was really more of a reflection of those existing economic anxieties, not so much the main cause of the Depression.
Right. The report also questions that conventional wisdom around, currency manipulation, saying those theories are kind of outdated and don't work in today's global economy. What do you think about that?
Yeah, it basically says that focusing on currency manipulation as the answer to trade imbalances is the wrong approach. They argue that the real focus should be on tackling the root causes of inflation: shortages, demand, and a lack of confidence. And like we were talking about earlier, tariffs and trade wars usually make these issues worse, not better.
So if tariffs and currency manipulation aren't the answer, then what is? The report seems to be suggesting that holding on to, you know, hard assets like gold and actively trading stocks might be a smarter strategy to navigate this, well, pretty turbulent economic landscape.
Yeah, you're right. The report encourages a shift away from long-dated bonds, especially government debt, and suggests that investors think about a more diversified approach that includes stuff like physical gold, silver, and hard commodities. These assets are, historically seen as ways to hedge against inflation and economic uncertainty.
It sounds like they're saying to think beyond those traditional investment strategies and consider a more, I guess, anti-fragile approach, one
Yeah.
that can handle the shocks of a volatile market.
Exactly. The report is challenging that whole forward confusion narrative that Wall Street often promotes, where they encourage you to seek refuge in those long-dated fixed income and government bonds. Instead, it suggests that investors should focus on companies that have strong fundamentals, like good earnings per share, EPS and free cash flow, XCF growth, particularly in the energy sector.
Interesting. The report paints a bit of a gloomy picture of the future, suggesting that we're heading towards an inflationary bust, or stagflation. What could be the consequences of that, both for investors and for regular folks?
Well, the report warns that stagflation is going to be especially hard for those who haven't prepared their portfolios for this kind of economic situation. Basically, it means people will be paying more for less, and those who just blindly follow, traditional investment advice could lose a lot of money. The report says we might only be 6 to 9 months away from this shift into an inflationary bust, so it's, really important for investors to start adapting their strategies now.
And what about, the social and political side of things? Could stagflation lead to even more instability?
It's definitely possible when people are struggling to make ends meet and their savings are, being eroded because of inflation. It can lead to social unrest and political instability. The report kind of touches on this, saying that historically, when public confidence collapses, often fueled by, political turmoil and wars, it often leads to economic turmoil.
Yeah, that makes sense. So what can we do? Is there any way to reduce the risks of Trump-Re-Flation and the possibility of stagflation?
Well, the report recommends a multi-pronged approach. First, it emphasizes understanding the limitations of those traditional inflation measures and considering alternative indicators like gold. Second, it encourages investors to diversify their portfolios, moving away from those long-dated bonds and instead focusing on companies with strong balance sheets and, solid business models.
So it's like a call for both individual action and a broader change in how we think about the economy. But before we jump to conclusions, let's take a closer look at some of the specific examples and arguments that are in the report. We'll dive into the nuances of Trump-Re-Flation and what the potential consequences could be for different sectors of the economy. All right, welcome back to the show. So as we wrap up our deep dive into this whole Trump-Re-Flation idea and how it could affect the global economy, let's look at some specific examples. The report talks about this really interesting case study about how tariffs might impact the Canadian economy.
Yeah, they use Canada as an example to show how tariffs can sometimes backfire.
Right.
They argue that, well, with all the political stuff happening in Canada right now, combined with those 25% tariffs the U.S. put in place, it could cause the Canadian dollar to drop, like, a lot.
Oh, wow.
They're saying it could go as low as 46 to 50 cents.
Which would make Canadian goods way cheaper for us here in the U.S.
Exactly. And that kind of defeats the whole purpose of putting those tariffs on in the first place, right?
Totally. It shows how connected everything is in the global market and how these protectionist policies can have consequences that nobody expects.
For sure.
The report also reminds us that things outside of any government's control can really fuel inflation. Like that example with the price of eggs here in the U.S.
Oh, yeah, that's a good one. They use that huge jump in egg prices. Remember, they're up a crazy 53% year over year to show how messed up supply chains can cause inflation, things like climate change and those disease outbreaks.
Yeah.
It's a good reminder that inflation isn't always just about, what the government is doing with money or how much they're spending.
It's kind of like that saying, there's no such thing as bad weather, just the wrong clothes. Maybe in economics, it's more like there's no such thing as bad inflation, just the wrong portfolio.
Uh-huh. I like that. And yet, the report definitely seems to say that having a diversified portfolio that you can adapt is key to navigating these uncertain economic times.
Makes sense. So as we wrap up this deep dive, what's the big takeaway for our listeners? What's the most important thing they should remember about this Trump-Re-Flation idea?
Well, I think the main message is that the economic landscape is changing in some pretty big ways. A lot of those traditional ideas about inflation, trade, and investing are being challenged. The report is basically telling investors to recognize these changes, to question what they think they know, and to be more flexible in their approach.
So to be open to the unknown and be ready for whatever happens.
Exactly. The future is always uncertain, right?
Yeah.
But if we understand what's happening and adapt our strategies, we can handle the challenges that come our way and maybe even find some opportunities in the middle of all the chaos.
And maybe the most important thing is to stay informed, keep asking questions, and never stop learning.
I totally agree. In a world where things are constantly changing, especially in the economy, knowledge is power.
Well, that's all the time we have for today. Thanks for joining us on this deep dive into Trump-Re-Flation. We hope you found it insightful and got you thinking. Until next time, keep exploring, keep questioning, and keep diving deep.